G'day folks, welcome back to another update for natural gas and its ETFs. Actual price has broken through some support levels we drew some time ago. Before we get stuck into charts, make sure you hit that like and subscribe button to support the channel. In terms of the outlook for natural gas demand, the expansion of AI data centers is projected to increase US natural gas demand by 3 to 6 billion cubic feet per day by 2030, potentially exceeding 10 BCFs as data centers seek reliable energy sources. In terms of the ETFs, BOIL, KLD and UNG, BOIL aims to deliver twice the daily performance of the Bloomberg Natural Gas Subindex. As of the latest data, BOIL is trading at 63.08, down 632 from the previous close. KOLD seeks to provide twice the inverse of the daily performance of the Bloomberg Natural Gas Subindex. Currently, KOLD is priced at 34.30, up 6.16% from the previous close. And UNG, designed to track natural gas prices, is trading at 17.73, a 3.27 decrease from the previous close. In terms of the energy infrastructure, major energy companies are investing in natural gas-fired power plants with carbon capture technology to meet the rising electricity demands of AI data centers, indicating a strategic shift towards integrating traditional energy sources with emerging technologies. So first off, looking at the natural gas commodity price, we look at the monthly, the weekly and the daily. So on the monthly here, the price is broken above the moving averages. Likewise on the CCI 150, it's in a bullish mode, so bullish movement on the monthly. On the weekly, we do have a break above as well on the CCI 150, but it's actually pulling back to that moving average range. The price is still well above its moving average range, but again, on this week, we've had a bit of a break to the downside. On the daily, we did draw this diagonal ascending trend line, and we did say that it could possibly break through this and reach the next level of support will be this horizontal support at 32.16. At the moment, the CCI 150 is still trending in a downward momentum, so we may possibly see the price retrace back to that level. So yeah, just keep an eye on that. We go to the intraday chart. This is a 1 hour chart. You can change this with any other time frame that you trade, with 2 hours, 4 hours, etc. But you can see here we only trade in the direction of the higher time frame, the daily. So you only take these short trades when they break below on the 1 hour or the intraday time frame. So you can see here the CCI 150 broke below the moving average range. That would have been the same period back there on the price chart, and you would have taken that short entry back there. And I would have closed out the trade when that CCI moves into that moving average range, which would have been near the bottom there. So that would have been a nice little trade to take. I did draw this divergence, and you can see there was lower highs on the CCI versus high highs on the price. And the way to read that is let me just blow that up. You draw a Fibonacci from that high to that low, and I've drawn this target area, the 23.38% level, and it more than 90% of the time it hits that range. In this case, it's gone down. It rested on the 61% for some time, for a number of days. Then it finally broke to the downside on that diagonal ascending trend line. But again, the CCI is still bearish, and the price is still moving south, so just be careful. Taking short trades only, and you would have taken the last short entry on that candle there when the price broke below the moving average there, and also the CCI broke below, so you would have gone short there, and you would have closed it out with a small gain when the CCI breaks into that moving average range, and entered another entry now, and you'd be in a fresh breakout to the downside for another short entry. Also, if you're interested, there's also this multiple indicator I've got here. It's in the description below if you want to learn how to draw it. Likewise, all these other moving averages are in the description below for other videos to follow. Now this basically shows you near tops and bottoms. It's not perfect, as you can see there. If I zoom out, you can see there all these red candles, all these red arrows indicate potential reversals, and these blue arrows pick a lot of the bottoms, but again, it's not perfect. So this is the daily chart for natural gas. You can see here it's giving us a lot of false signals to go short, but again, we don't trade necessarily on that. The way I like to use these, this indicator and these bearish or bullish arrows is when I see a divergence. Like I said, we've got a slightly lower highs on the CCI here. This is on the daily. This is high highs on the price. Once you start seeing that divergence, you combine that with these red arrows when this indicator breaks below the -2, and that's potentially where you might see a bit of a weakening in the price. The same is true for going long. So let me go back to, you can see back here we had a bullish divergence, higher lows on the CCI versus lower lows on the price. We had a cluster of blue arrows, or in this case, the indicator broke above the +2 level, and that's where you would have gone long if you're trading on the daily. There's another bearish divergence here, higher highs on the price, lower highs on the CCI, and you would have gone short after that cluster and after seeing that divergence. Another cluster there, another bearish divergence. So that's how I use that. So don't trade all. So you can see there's a few false breaks. So you don't trade these in isolation. You trade in conjunction with these bullish and bearish divergence. This is BOIL. So on the monthly, we've got a bearish momentum below the moving averages. There is no CCI for the monthly. On the weekly, we've got a bullish divergence here versus lower lows on the price, and that's made a bit of a move to the upside and still going, although we've got it this week, we've got a bit of a bearish candle. And on the daily, it's actually bounced off this resistance at 80.01 and pulling back down. You'll notice the CCI has broken into that moving average range, giving us a neutral signal. So just cautiously maybe going short in the on the intraday. So if we go to the intraday charts, again using the daily as a reference, we only go short when this is predominantly short. Be careful of this. Sometimes you can see they're broken to the moving average and then it bounced out of there. So that's why I like to wait for this to break below the moving average range to confirm a downward trend. So it might be a bit early to go short yet. On the hourly, you can see there it's already broken below both the price moving average and the CCI moving average. So just cautiously waiting for that daily to break below to go short. Notice how far it is from this ascending trend line as a support level. So it may well come back to that level before possibly bouncing or breaking through that. In terms of the multiple indicator, this is the BOIL outlook. Now you'll notice here it's a bit hard to read this one. We had a bullish divergence here versus lower lows on the price and a few bullish candles there, and you would have taken a long position on that one there. There is no currently any red arrows on that yet. There again, I like to trade with the showing a divergence, and you can see there that was another bullish divergence between that point, and that'll go up to that level there versus the equivalent range on the price. So you can see there when you see a divergence happening, bullish divergence in this case, you would have gone long. Now this didn't rise much, so we can't always expect a full reversal, but at least a small retrace to the upside. So just always be cautious of that. We had another bullish divergence there, again a very minor rise, and that was another one there. You can see there, again a very, very minor rise. So you may want to look at the higher time frame to confirm the trend before taking some of these entries. So a KOLD, this is the inverse. The price is broken below the moving average range, giving us a bearish signal. There's no CCI for it on a monthly. On the weekly, it's broken well below that moving average range on the price. Likewise, the CCI, although there's a slight move to the upside on the weekly. And on the daily, we did have this break above after it bounced off this support at 27.80. And you'll notice the CCI is broken into that moving average range. If we go to the intraday chart, again, cautiously, I wouldn't be going long at this point, but you'll notice here we've got a bit of a bullish divergence versus lower lows on the price, and it's bounced. It hasn't quite reached our minimum target range yet, so you may see further upside on this one. So just be cautious. I wouldn't be going long. I'd like to see this break above on the daily to be more bullish. If we go to the multiple indicator, you can see there, again, don't trade these arrows in isolation, this indicator. I'd like to see a bullish or bearish divergence to be it's like it did back here, a bearish divergence versus high highs on the price, a cluster of arrows, and you would have gone short. In this case, it bounced, hit our minimum target range, a few more red arrows, and it fell further. There's no divergence currently on the daily. The UNG on the monthly, we're still below the moving average range, although it's approaching that moving average, so just cautiously be prepared to go long if it starts breaking higher on the smaller time frames. The monthly CCI is also already broken above that very narrow moving average range, so neutral to bullish movement on the monthly. On the weekly, we did have this bullish divergence, higher lows on the CCI, and that's CCI still rising versus lower lows on the price. Again, the price is making some move to the upside, but again, I'd like to see it break these previous highs to be more confident. And on the daily, it's actually hit this resistance at 20.02 and bounced down from there. And you'll notice, similar to the other charts, the CCI is broken into that moving average range, giving us a neutral signal. So just be cautious of this. This may actually bounce out of there like it did here. So I'll just wait for that to break below that moving average range to be more confident of trading intraday to go short. Now, if we go to the intraday chart, Okay, again, wait for this to break below that moving average range on the daily. This is the 1 hour chart. Now here we've got a bearish divergence, lower highs on the CCI versus higher highs on the price. I've drawn a Fibonacci range here back to this previous low. You can see there it's already hit that 23-38% retrace level. If I take it back to that level, not quite right. Let me just draw that again. So if I take it back to there, you can see there it's right in the middle of that range, of that 23-38% level. But notice the CCI is still bearish, although it's pulling back towards that moving average range. So we might see a bit of an upswing before potentially dropping further. Again, I'd like to see this break below on the daily to be more confident to go short. On the multiple indicator chart, again zooming in, there's no red arrows on the daily. We had a few blue arrows here, but again there was you could argue that was a bullish divergence along those higher lows on the CCI there versus double bottom there on the price. So that would have been a bullish divergence in alignment with those blue candles. Going back this way, there's no divergence I can see. None there and none there. So that last divergence would have been this period back here. Lower lows on the price versus higher lows on the CCI. I would have had to move that out to that area there to be same in alignment with the price. Again, bullish divergence, blue arrows, and you would have gone long during this period. You may have started back here. You possibly could have averaged down a couple and then wait for it. But just be careful again with these. Sometimes they're not full-scale reversals. There could be just a bit of a upswing like it was back here. So in this case, it actually advanced quite nicely. There was another bullish divergence back here. That's what I mean. There was no huge move to the upside. So always be careful with these. There's no indicator it's 100%. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again and see you in the next video.